If six figures still feels tight, it's not you, the math changed. Today I'll show how a $100,000 salary can shrink into a $50,000 lifestyle once the silent taxes take their cut. Federal and state taxes, housing, interest, insurance, and the subscriptions you barely notice. We'll prove it with one clean funnel using a single earner in Los Angeles, California. No fluff, just numbers. What changed? The old promise was simple. Get the degree, land the job, buy the house, build the life. That worked when wages, credit, and housing moved together. Now, before your paycheck becomes wealth, it passes through several toll booths: taxes and FICA, housing costs, interest on past decisions, insurance to participate in daily life, and a growing stack of monthly subscriptions. Even at $100,000, money disappears before it can compound. The 90-second timeline. Here's the compressed history of why the starting line moved back. First, the early 2000s brought uncertainty and hiring freezes. Many began behind the curve. Then the 2008 credit crisis. Job security cracked, credit access shrank, and first-time buyers missed their window. In 2020, the pandemic reset. Companies got leaner, roles merged, moved, or automated. Next came inflation and higher interest rates, pushing housing and essentials out of sync with wages. Layer in automation and AI pressure, and bargaining power slipped. Each shock was manageable on its own. Stacked together, they turned progress into a subscription. The rules of this demo. This example is a single W-2 earner making $100,000 in Los Angeles, California. California has state income tax, so this is a tougher tax environment than no-tax states. We'll start from gross, remove the unavoidable slices, and show what's actually left. If your situation differs, city, debts, dependents, swap your numbers into the same structure. The 100K funnel. Here's the funnel. Gross income, taxes, federal, FICA, and California state income tax, housing, rent and utilities, debt interest, student loans is the primary example, insurance, health, auto, renters, subscriptions and fees, essentials, groceries, transportation, phone, core living costs, the remainder, the only money that can become assets. Step 1. Gross to net basics. Start with $100,000 gross. With the standard federal deduction for single filers, estimated federal income tax is about $13,449 for the year. FICA, 6.2% Social Security, and 1.45% Medicare total $7,650 on $100,000. California state income tax for a single filer in 2025, using the state's standard deduction, is roughly $5,327 in this illustration. Combined, taxes are approximately $26,426 per year, about $2,203 per month. Monthly gross is $8,333. After these taxes, take-home before benefits is about $6,130. Step 2. Housing. Housing is the largest fixed cost for most people. In Los Angeles, a typical one-bedroom rent recently ran about $1,857 per month. Add utilities, electric, water, internet at about $220 per month. Housing plus utilities, $2,077 per month, every month before you save or invest a dollar. Step 3. Debt interest. Now debt. Student loans, a $33,150 balance at a 6.53% APR on a standard 10-year plan, is roughly $380 per month. Early payments are interest-heavy, so your cash flow services the past before it builds the future. If you don't carry student loans, this slice may be smaller. If your balance or rate is higher, it's bigger. Step 4. Insurance. Insurance is the cost of participating in daily life. Health insurance, worker contribution for single coverage, about $114 per month in this example. Auto insurance in California for full coverage, around $260 per month. Renters insurance, about $13 per month. Insurance subtotal, $387 per month. Step 5. Subscriptions and fees. Subscriptions and fees are the shadow tax on progress. Streaming, apps, storage, a couple of productivity tools. We'll use a conservative $140 per month. Small auto drafts invisibly erase raises. Step 6. Essentials. Essentials keep you moving. Groceries around $500 per month. Transportation beyond insurance, fuel, maintenance, occasional transit, around $220 per month. Phone plan and miscellaneous essentials, around $120 per month. Essential subtotal, about $840. Let's stack it monthly, with taxes already removed in the net. Monthly gross, $8,333. Taxes, federal, FICA, and California, about $2,203. Estimated take-home before benefits, about $6,130. Now subtract fixed and semi-fixed costs. Rent and utilities, $2,077. Student loan, $380. Insurance, $387. Subscriptions, $140. Essentials, $840. Add those, $2,077 plus $380 plus $387 plus $140 plus $840 equals $3,824 per month in fixed and semi-fixed costs beyond taxes. Take home $6,130 minus $3,824 leaves about $2,306 per month. That $2,306 is the true monthly discretionary before retirement contributions, before big annual expenses, before emergencies, and before saving for a down payment. What $2,306 really means. $2,306 a month sounds workable until you realize it has to fund everything that looks like progress: investing, savings, irregular bills, travel, gifts, repairs, and surprises. Annualized, that's roughly $27,672 of discretionary room. On a $100,000 salary in Los Angeles, that's about 27.7% of gross that's truly flexible in this example. When the flexible share is this limited, a rent increase, insurance hike, or a surprise repair can erase your progress for the year. That's why 6 figures can feel like half. Your spendable, investable slice is what counts. Rent versus buy, the quick reality check. What if you try to buy instead? With current prices and mortgage rates in the mid-6s or higher, a typical Los Angeles home payment, once you include principal, interest, property taxes, and homeowner's insurance, often exceeds this rent example. You'll also need a stronger down payment and tighter debt-to-income ratios to qualify. Unless prices, rates, or your debts materially change, the funnel tightens further. The job market squeeze. There's another reason the funnel feels fragile. When roles merge, outsource, or become software-assisted, bargaining power slips. Entry-level roles ask for experience, advanced candidates get labeled overqualified. More people compete for fewer resilient seats, licensed, trade, or protected roles, while the rest ride volatility. Volatility and narrow margins don't mix. The silent taxes. Interest on past decisions steals today's raises. Housing and insurance act like mandatory subscriptions to exist. Real necessities inflated at different times than wages, making budgets feel permanently tight. Small auto drafts hide in plain sight and convert growth into maintenance. 3 numbers that predict the squeeze. Track 3 ratios monthly. 1. Interest paid as a percent of income. If it's above 5 to 10% and not falling, your runway is short. 2. Insurance as a percent of income. Sudden jumps quietly shrink your discretionary. 3. Total subscriptions and fees. This is the easiest to improve and the easiest to ignore. 18. Why $100,000 feels like $50,000. It's not the paycheck, it's the tolls. In a world of higher baseline costs and persistent interest, your gross income is a bad proxy for lifestyle. The $100,000 headline number sells confidence, but the after-toll funnel sells the truth. How to widen the green zone. 3 levers move fastest. Interest, refinance, consolidate, or accelerate payoff where APR is highest, especially revolving credit. Housing, negotiate renewals, consider room shares or house hack variants to shift fixed red costs towards yellow. Subscriptions, one pass-through bank statements usually frees meaningful dollars per month immediately. The takeaway: $100,000 isn't broken income,
It's income routed through too many toll booths before it can become wealth. In our Los Angeles example, after federal, FICA, and California state taxes, plus housing, debt interest, insurance, subscriptions, and essentials, you're left with roughly $2,306 per month to create the life you want. Measure purchasing power, not paychecks. That's how six figures starts feeling like six figures again. Run your numbers through this funnel. If your green zone is smaller than you thought, it will keep feeling like less until you change the structure.